Hey guys, welcome back. Sorry I didn't get a video out yesterday. I have been traveling, but it's so great to see each and every one of you. Guys, we have officially entered a structural supercycle where the physics of AI are now dictating the supply. And in my opinion, Micron is emerging as the ultimate gatekeeper in this phase. Last week, we saw a rare alignment of signals from Samsung, Western Digital, SanDisk, and Seagate. When they all dropped their earnings prints, it all pointed to the same conclusion. The floor for high-performance memory has permanently been raised. But the real story isn't just about the current demand we see in the market. It's about the fundamental re-rating of Micron's long-term value. With a new street high price target of $1,000 per share, all backed by a projected $139 earning per share by 2030, we are looking at a valuation gap that is almost unprecedented for a company with this level of hardware dominance. Today, we're going to dive into why I remain so bullish on Micron. And we're going to highlight the pure math behind the breakout that we're seeing and this new price target by D.A. Davidson. We are currently sitting about 1.25% below the 52-week high for Micron. It's time to move past the noise and the headlines and purely focus on the data and the signals that we see in the market right now that is driving the next phase of this AI infrastructure moonshot for Micron. We're going to look at the fundamental metrics on their balance sheet that make me so bullish for this company and what they plan to bring to the market in the next 24 months that, in my opinion, will continue to differentiate the company overall. And then finally, we'll dive into the math behind that price target and see if it makes sense to each and every one of us. But that's what we're going to cover in today's video. If you haven't done it already, make sure you hit like, make sure you subscribe to the channel. Guys, I want each and every one of you to be in this community so we can engage with each other, learn from each other, continue to push our learning to make us better and more informed investors. Let's dive in and take a look at the dashboard, and I'm going to show you 4 key metrics that make me or continue to make me so bullish on Micron. All right, let's dive in. Guys, what you can see in front of you is a dashboard that pulls out all the recent metrics. And there's, like I said, there's 4 key areas that I want to highlight that I've kind of drawn, and you can see in these neon green rectangles that make me bullish for the company. The first one is just the growth gap. Here I want to look at forward PE, and I want to look at the PEG ratio. We know that most investors purely just look at price, and Micron closed on Friday about $5.42 a share, close to its 52-week high. And most of us only look at price, but I can tell you that the professionals look at these metrics, including forward PE and PEG ratio. These metrics suggest that while the price is high, the earnings are growing even faster for the company. Take a look at that second column. I've highlighted here. You can see the forward PE of 5.67. This is the most critical metric for any new investor that's watching this video right now. It means that you are only paying $5.67 for every $1 of profit the company is expected to make next year. For a high growth AI stock like Micron, a forward PE under 10 is considered extremely low, suggesting that the market hasn't fully priced in the future windfall of this company. And then right below that, the PEG ratio. You can see it's currently at 0.05. The PEG ratio factors in price and earnings to growth, and it adjusts the PE for the speed of growth that the company is seeing. A PEG ratio under 1 usually is a huge buy signal for a company. Micron currently at a 0.05. It's telling us that its growth is significantly outpacing its price, increasing it by a massive margin. This is a huge bullish sign for the company overall. And then I want to jump over to the next column because there's some earnings velocity in here that I want to, 2 metrics that show or demonstrate the earnings velocity for Micron overall. The metrics I'm going to call out are the earnings per share this year and the earnings per share quarter over quarter. This is clearly, these metrics show that Micron has moved out of a stagnant period and is moved into an explosive expansion phase. Take a look at the top of the page. You can see earnings per share this year. It has grown by almost 589%. This shows a near 6-fold increase in the earnings over the last 12 months. It signals a complete structural turnaround from previous years for Micron. And then right below it, the quarter over quarter, This metric may actually be the most bullish signal on the entire board that we're looking at right now. When you see earnings quarter over quarter of 756%, it proves that the demand for AI memory is accelerating right now in current time, not in the distant future. Those are huge signs for the company. As a new investor or a current investor, you have to be confident when you see those types of numbers. Now let's move over to the next column towards the bottom. You see gross margin and profit margin. Micron has always been known for its efficiency, its operational efficiency, and I think these two continue to demonstrate why. It doesn't matter how much you sell if you can't keep the profit. Micron's internal efficiency is now at elite semiconductor levels. You can see their gross margin is just under 59%. This represents the profit that is left after the direct cost of making the chips. A margin near 60% indicates that Micron has pure pricing power, meaning they can charge a premium because their HBM memory is a necessity for AI. It's not a commodity. And then right below that, in a profit margin of just under 42%, this represents that after all expenses, taxes, and interest, Micron is keeping over almost 42 cents of every dollar that it brings in. This is exceptionally high for a hardware company, and it provides a massive cushion for the company for future R&D or potentially future dividends for all of us investors. And then the last thing I want to call out is just the whale factor. Because as any of us as investors, whether we're new or current investors, it's reassuring to see who else is investing, who else has conviction for this stock. You guys hear from me each and every day on Micron. You know where my conviction is, but take a look at that institutional ownership at the top of the column right there. Nearly 80%. The stock is owned by the institutions, whether that's banks, hedge funds, pension funds. We know these whales have massive research teams, and they typically invest for the long term, providing a label, and this provides a huge level of stability to the stock's floor. So this is a massive sign. When you see almost 80% of ownership by huge institutions, this is massive. We know that they also got rolled into the NASDAQ, but also we know when we take a look at the closing cross and we look at those stock block trades that I show you on this channel, there is massive institutional support for Micron. And the last thing I don't have highlighted, but I'll call out, it's just towards the bottom of the second column. It's the debt to equity. You can see it's a 0.15. I'll get to that later, but Micron has very little debt compared to its equity. This clean balance sheet that you're seeing right here, it means they aren't at risk if interest rates stay high. They have the dry power. They have the leverage to build more factories to keep up with this AI demand. Guys, as a new investor, 542, as I mentioned, it may feel high. It may look like we're at the peak. But when you look at a forward PE of 5.67 and 756 quarterly earnings growth, you realize you aren't chasing a bubble with Micron. You're buying into a fundamental re-rating of what this company is worth in the structural supercycle of the AI era. And as I mentioned, it's not just my bullish feeling for Micron. It's not just based on the current financials I shared. I also remain bullish based on the products that they want to bring to the market through the 2027 timeframe, because Micron, in my opinion, has officially leapfrogged the competition in the R&D lab. So let's jump over and take a look at what some of those products are that continue to make me feel bullish. And there's three that I want to call out, although this is not the full list. There's many more, but I just wanted to focus on three. The first one is the 1 gamma supremacy they have. Micron's 1 gamma node. This isn't just a minor tweak, guys. This is part of the reason for the $1,000 price target we saw from D.A. Davidson. They mentioned their node leadership overall. But this is the first node to fully utilize the next generation extreme ultraviolet lithography at scale. This node is on track to become the majority of Micron's bit mix by the mid-2026, the mid this year, providing a step function improvement in performance and power efficiency that competitors are still racing to match. You can see down below that 30% improvement in memory density per wafer compared to the 1 beta DRAM technology. You see greater than 20% reduction in power compared to the 1 beta DDR5. And you also see a 15% speed improvement compared to the 1 beta DDR5. Guys, this is a huge improvement for them. This is one piece that I said that makes me feel very bullish. The second we've talked about a lot, which is this HBM4. We know currently right now volume shipments for their 36 gigabyte 12 high HBM4 have already begun shipments for NVIDIA Vera Rubin's platform. The product delivers 2.3 times the bandwidth of previous generation and 20% better power efficiency than the previous generation as well. They've also begun to sample a 16 high HBM4 product, which offers another 33% capacity increase. And with the HBM4E already in development for the 2027 volume ramp, this company is stacked when it comes to HBM4. And this is the exact product that the hyperscalers, that the big players are looking for in the market. So they're very well set up against the competition. Last time we saw them, you may remember, Micron moved from a 5% market share in HBM to a 20% market share in HBM. So this company is positioned well right now. And the last piece that I want to call on or just bring out is their SOCAMM 2 overall. As you can see on the screen, there's a couple different things. But while GPUs get the headlines, the CPUs, as we've talked about, in the AI servers are hitting a memory wall as well. Micron's new architecture is the solution for both of these. The LP SOCAMM 2 is the world's first high-capacity memory module that consumes 1/3 of the power of a standard server RAM. The latest 256 gigabyte module enables massive 2 terabytes of capacity per CPU, which is essential for large context windows that next-gen AI agents require. For intensive workloads, Micron also launched a multi-rank DIMMs, offering a 39% improvement in bandwidth for AI and high-performance computing environments. Guys, this company is so well positioned. You can see below, 2 times the capacity, 2.3 times the speed over faster time to first token, and 50% less consumption overall for power. This is exactly what their companies that they supply to are looking for in the market. But there is another piece that I want to get to before we talk about the price target that hit the street last week. And this is the X factor that I mentioned in the beginning of the video. I want to talk about this because the market is starting to price in this X factor and the potential for a massive acceleration in shareholder returns. For a long time, we know the bear case against Micron was its debt and heavy capital needs. But those arguments are officially being dismantled, or they were dismantled during the March 18th earnings briefing. Let me show you what I mean, because I want to pull up just one slide from that earnings briefing. If you guys recall, we went through all the data together. But Micron now is officially becoming a cash flow machine. They just printed, you can see, a record $6.9 billion in adjusted free cash flow for the single quarter. To put that in perspective, their operating cash flow hit $11.9 billion, which means nearly 50% of every dollar in revenue is coming in as pure cash for the company. Instead of just hoarding this cash, though, Micron's management team is being very aggressive. They recently launched a tender offers of approximately, let me pull that up. They offer these offers of approximately $3.5 billion, I believe, $3.25 billion in senior notes. This follows a broader strategy of deleveraging that has already seen long-term debt drop significantly from $14 billion a year ago to $9.5 billion today. And this is where I want to get to the X factor, because in my opinion, what we may be able to see is a company that could potentially move into a buyback. And this is what I haven't heard. It's been a while since Micron, but with a balance sheet this clear and a debt ratio of just 0.15. I showed you that early, but when we pulled up again, you can see that debt ratio right down there of 0.15. The path is wide open, in my opinion, for a major buyback expansion. They've already signaled their confidence with a 30% increase in the quarterly dividend to 0.15 per share. But guys, in my opinion, they have the cash. They eventually could move to a buyback program. And the question is, what would that do to the share price? So we know they still have billions remaining on their balance sheets to authorize for a share repurchase program. And when a company with a forward PE of just 5.67 starts to buy back its own stock, it creates a massive tailwind for earnings per share. They already have a projected earnings per share to hit 19.15 next quarter. So this could be a huge opportunity for them. If they were to buy back stock, there's no question this would drive the valuation higher. It would drive the price higher for Micron. Will they do it? They have the cash to do it. We know they're also building out. The only thing that could hold it back would be the CapEx requirement. Micron is planning to spend about $25 billion on its global manufacturing footprint this year. But because their cash generation is so high, they can build the future of AI and still return billions to all of us at the same time. That is the definition of an elite institutional grade investment. And this is why I remain so bullish on Micron. Hopefully you can see all of the metrics and how well this company is positioned, not only from a financial perspective, but from a product line perspective, what they plan to bring to the market and the free cash on hand. They have the ability to meet the need in the market. And now I want to dive over and just talk about that price target that we saw come in. We saw it last week. I'll pull it up on the screen, but we saw D.A. Davidson initiates Micron at a buy. Remember, it was a new price target from them, and it's set at a street high $1,000 target overall. Let me walk through what they based it on overall. It's a projection of a structural shift for the company. They are modeling an earnings per share of $139 in 2030, as I mentioned. And when you apply a modest 10x, historically pretty conservative for a tech leader, and you discount that future value back at a 10% annual rate, the math spits out a target roughly of $1,044 a share. They are effectively telling us that Micron is no longer a memory company. It is a cornerstone of the global AI infrastructure. That's a huge mark. And I'm curious to see what other banks will do and follow. We did see TD Cowen get up to about 600. We're seeing other higher price targets. Will this continue to be a shift as we see forward? Will we start to see consistent $700 and $800 price targets from Micron moving forward? The last thing I want to dive into is just look at the performance that we saw last week and what we can expect moving into next week. So as I pull it up, you can see this is where we ended last week at 542. When we factor in everything we talked about, we see a stock that is fundamentally cheap. But when you look on the chart here, it looks a bit like it's technically extended. The stock is up. If you look down below in the graph at 1 month, it's up 48% over the last month. In the daily chart, we are stretched far away from the simple moving average. The 200 simple moving average is 277. So we are 96% above that. And even when you look at the simple moving average of 20 days, which is 461, we're 18% above that. We are currently bumping up against the horizontal ceiling of 542. You can see that dotted line across the graph overall. And the short-term analyst targets sit at 551. You can see that right over there in the analyst sentiment, which is just under a 2% upside overall. So this offers limited immediate upside based on those analyst targets and where we are against the simple moving averages. So in my opinion, guys, I think we could see some choppiness this week. I think, particularly when you factor in that Palantir's earnings are on May 4th, and we know that the market is currently viewing AI through the lens of spending versus ROI. If we see any weakness in Palantir's commercial AI growth, it could trigger a sector-wide breather or kind of a slowdown or a bit of a pullback across the sector for other AI infrastructure players like Micron. A healthy pullback, in my opinion, to 510, 515 range isn't a sign of weakness, though, for the stock. It would be a gift for all of us investors. It'd be a gift for new investors who are looking to build a position before we get to the next leg up in this stock. So when you step back, you can clearly realize and see that the narrative has shifted. We're not talking about a memory company anymore with Micron. We are talking about a cornerstone of the global AI infrastructure. The $1,000 price target that we reviewed, it sounds aggressive until you run the math on an earnings per share of $139 by 2030. And when you realize that the 1 gamma node, that the product that they're bringing, that lead is real for Micron versus the competition. The physics of AI requires exactly what Micron is building: high density, power efficient memory products. So as we move into next week's trade, I'm watching to see if the market finally starts to value this machine for the infrastructure player that it has become. I'm curious to hear what your guys' take is, though. Do you think that the power efficiency edge for Micron with their SOCAM 2 is the real secret weapon for 2027? Or do you think it's another product overall? Or is it something completely different? And what are your thoughts about how this stock will trade as we move into opening bell on Monday? What do you think the performance will be across the week? Let's keep the conversation going in the comments below. As you know, I answer each and every single comment below, so I'd love to engage with each and every one of you. Guys, welcome, in my opinion, welcome to the new era of memory. I think it's just getting started. We've seen the demand. We've seen the pricing power from all the earning prints that we saw last week. We saw the demand as well from the hyperscalers. So it is, and we are entering the next phase, and it's going to be awesome to see. Guys, I'll see you in the next video. I hope you have a great night. Take care.